I speak very low. Let's see. Okay, testing. 1, 2, 3. 1, 2, 3. 1, 2, 3. 1, 2, 3. And this should be okay. Let's see. Testing again. 1, 2, 3. Test. That sounds fine enough. All right. So I'm gonna stream and record at the same time. Okay. So I got a bit excited about the last video, and I caught something that I thought was very interesting. So the last video was projecting SPRT would be the next case scenario for a squeeze. Now, the timeline is unguaranteeable. You cannot predict the timeline. However, there is a number that can help you figure out how soon. It's a very interesting number, and it actually makes a lot of sense. So I think I called it out down here around 16. No, I called it around 13. I think. Let me see when I got in. SPRT sell 50, so sold at 50, bought at 13. So yeah, averaged around the 13. Oh, wow. Okay. So more than tripled what I put in 2 accounts, actually. Okay, regardless. So here's what I was looking for. Specifically, I realized this piece of detail. Now, that detail is in Ortex, and I have a few others that I want to take a look at. But here's that detail, right? In Ortex, you see the CTB Max. If you have Ortex, you can get it for free. I believe it's a $600 yearly subscription. So, or $60 monthly. I'm not sure. I have the yearly. But there's a little bit of data that can really give us a huge prediction. So a low CTB is about 0.5 to 2 or 3%. Okay. Now what this is this is the cost to borrow. So you're paying this much for every share that you're borrowing. And if we're seeking a specific game play, right, a strategy to make money from shorts, we need to know that these shorts, the people who have sold something they don't own, so they have to borrow it, therefore the cost to borrow. So they sell it when they don't own it, so they sell a loan and then they get it back later. They buy it back later. So their first step is sell, second step is buy. Now, it's opposite of going long on a company, of course, as we've talked before. Going long just means you like a company, so you're going to buy it first and sell it maybe later for a profit gain when that company goes up in price. But the opposite is a gain when it comes to shorting. You're selling first, buying back. So this cost to borrow is very, very important. And this was what I found with SPRT. So in SPRT, it's probably still going to be super high. Oh, they recovered a lot. Look, right? That's huge. That's absolutely ridiculous. Nearly 500% interest to borrow. This is the fee to borrow. That's the max. The average is about 350%. That's already ridiculous. The minimum is 236. This is when you are paying a Euro hedge fund and you are paying a lot of money to hold on to a position. that's already losing you money. Think about the concept. As a risk management, you want to reduce your losses if you're playing this through safe risk management. Now, I can question a lot about these hedge funds and their risk management when they're shorting or over shorting 130% of a single stock, aka GameStop, GME. So the risk tolerance to me is almost bullshit, because even if they have risk tolerance within their company, like as an agency inside, they're doing squat right now. So in the case of stable, I mean, desperate risk management, you're not going to be wanting to pay 300, 400, 500% for this share that you borrowed, who knows, right? Like $2, and now it went to 60. Like, you're not going to be holding on to that. So right before, I want to see if I can find this, the cost to borrow. Right before this explosion here, cost to borrow average, cost to borrow average, new. Okay, this cost to borrow, well, this one's weird. This is new. Why is it new? Oh, max min. Let's do min. No, that doesn't make sense. CTV returned, standard deviation. I'm trying to find a good why doesn't it show me the 400 something percent though? I guess it's up here. All right, there we go. So right before this pop-up, about that $13 mark, I came up and I saw that the CTB was over 200% at the $13. And I had a strong feeling that no one's going to want to pay 200% for fees of borrowing a share that they're already losing money on. So that was my first hint. So that blew it off the top. As soon as I got into 13, this was my signal to get in. Not only that, but the recovery and the technicals. Like, you can obviously see, if you're looking at SPRT, let me grab this one, my temporary plays over here. If you're looking at SPRT at 13, this was already in the recovery process. So I was right here. I was looking at it. I'm like, all right, it went down from previous $20 over here, right? So it went down, it stabilized, it even started climbing and reversing its trend. And I was like, all right, this is a good time to get in. And then my final signal was how much that they are paying to borrow. So let's see what the next plays are. So I was looking at this, and it grows really quick, really high, very quickly. So the next possible ones I was looking at was using this for the previous sundials. They're getting there. Now they had a squeeze also, which was after January 28th, or whatever date that was for the squeeze. So after January, this is February 11th, and I feel like there's going to be a similar pattern happening. There is a pattern being played out here, and I'm seeing a lot of the same companies starting to come back and squeeze for a second time, aka support. Support has squeezed up to 20 before, right? And then we just squeezed again to 60. So this pattern, and maybe I can look at the timeline, but that pattern of, time, showing me that there's going to be again another pattern, and it's about to play out. Because if I'm predicting maybe 3 months before the AMC squeeze again, after the AMC squeeze, there's going to be another sundial right now, right? Sundial? Yeah, SNDL. Another sundial squeeze and another OGI squeeze. So what that might mean is that it's already starting to climb. As soon as you reach above like 3%, this cost to borrow starts to increase very quickly, especially when your utilization is high. It basically means that there's like no more shares to loan. Like, if all of the ones that could be loaned are loaned, and supply and demand. If there's not a lot of supply of loanable shares, the interest cost to borrow is going to increase, and somebody's going to buy it because they're going to need to borrow shares and short them and try to push the price down. So even though utilization is a very key signal for what has a potential of short squeezing, I'm also looking at free float to see how far. Like 302 million on Sundial is going to be pretty good. I shouldn't really be talking about Sundial because this is way down the line. The next possible one, so I'll get back to Sundial in another day, but the next possible squeeze would be potentially Hood. Yes, Robinhood. Robinhood's got a huge utilization, a huge cost to borrow, and this just increased over the last week from like 100 or 50% to like 350, right? But because the utilization is high, there's no free shares available. You're utilizing all of them, 99.98%. Then there's not a lot of ability to loan, so this keeps going up. But personally, I mean, that already had a squeeze. Now this squeeze is questionable on what actually happened here. I feel like it was a trap. I never entered Robinhood, but I'm watching it for this particular situation to see if my prediction can be correct. But the case is, I wouldn't even invest in Robinhood, even with a junk account. Robinhood's a joke company. I'm actually trying to move away from Robinhood as much as I can. And honestly, their strategies are becoming very, very sketchy when it comes to general marketing and also their relationship with Citadel. Like, they're a huge banking connected to a small company that wants to be a big company. Like, they're going to be using each other. And let's not talk about payment for order flow and God knows what else. There's just so many red flags on this company. My point is, you wouldn't catch me dead holding any of this company's shares. Maybe if I see a nice squeeze, but even this one's not going to be a nice squeeze. There's only 17 million shares available for shorting, for cover. So they got to buy back 18 million here, buy back. This volume itself was 175 million. Now the total free float of Hood, I think, is about 500 million. I think it was very similar to AMC actually. Shares out 855 million, free float, so about 670 million are moving around. There's total of this many, but there's like 150, 60, 70 people, not a million people or shares that have been held for a long period of time. Therefore, they're not technically free float, they're long holds. So that case scenario, you're going to see a possible pop-up again on Robinhood. I don't even think it's going to be that big of a deal because 17 million shares covering as per the share short percentage, the shares on loan, and not all of these are actually shorted, but for such a low number I can see it. Oh, 500 failed to deliver on day one. That's so weird. Anyway, so if it does pop, that's only like 17 million shares, which in a company that can trade 175 million in one day, they can cover this in like a morning or a power hour evening time period, right? Because the volume is going to increase so fast. There's going to be a lot of buyers and it's going to spike. I mean, 17 million is still a good amount for an instant spike, but don't expect this to last longer than an hour, right? If you think it's going to come back down and come back up after, I wouldn't expect that. You just got one good bump and then you leave and that's it. That's not a lot of shares that are loaned. It did have a lot at one point, which was this spike here, but they don't have the data on it exact, so they'll have to release it. Exchange reported, so the exchange reported after that week. I guess this counts. So if this up here constitutes the whole week, 20 million shares loaned. So if this 20 million shares loaned was related to this particular spike here, we can see 80 again. But yeah, these shorts are hurting. They got to pay a lot of costs to borrow. CTBs. So that was my look on the immediate one. This might happen next week. It might happen 2 weeks from now. Blink charging has reached above 20, which is very, very specific. It kind of works based on multiples of 5. Every 5% it increases in rate, eventually going to the hundreds, and then the rate is basically well, unmanageable. I mean, 100% is already the exact amount that you have to pay. 200% is double, right? So the exact amount that you loaned out. So if you loaned out $10 million worth of shares, your interest, 5%, is a small piece. What, 5,000? But if you go to 100%, well, you're paying 5 million on top of the 5 million that you were borrowing. And this is, I think, a daily cost. This isn't monthly. This isn't yearly. Maybe the percentages are yearly or monthly, but they're paying daily for that cost as it increases. So this is a good point for very, very fast forward movement. The fail to delivers were pretty consistent. This is BLNK, Blink Charging. So this was another company that got shorted heavily at one point. You've got 106,000 failed to delivers here, and 362,000 failed to deliver. So it doesn't have a lot. I mean, combine all these bars, you're looking at maybe 20-30 million of failed to delivers, which is still pretty penny, considering the current shares on float is also 20 million. And we did have a peculiar couple of spikes. This company has been spiking very, very, very heavily. So this was the last spike here. Oh, this one's a big bar. 11 million failed to delivers in one bar. Check that bar out. That's a hell of a bar. Which this could have been the 11 million shorts that covered in order to push the price back up. So that's the point, right? You are shorting a company. They are selling something you're borrowing. But a fail to deliver is when maybe 5 people borrow the same share, right? You can only give to 1. So the other 4 have failed to deliver, which gets entered into a queue that has to be paid back in time. Now, time periods, this one doesn't have a very clean one. There's no rule or regulation that actually forces a time period. But what I'm seeing with these spikes is I think I found a pretty average 3 to 4 month time period before these squeezes come into play again, right? So maybe they hold these failed to delivers for 3 or 4 months. Now, if we take a look at this date, that's May. Over here is December. Horrible with years and months and things. May. So that's 1, 2, 3, 4, 5, 6, half a year. Okay. So it could be about a half a year period. I have to again check the timelines on all of these different spikes and see what the pattern is. I haven't really looked at that. However, we can say that at minimum it's 3 months or 6 months possible. So at least we have a range of space. And that would kind of work out with AMC squeeze. AMC squeezed on January and then squeezed in June. And that's, I mean, 5-6 months, half a year. It was the end of January, so it doesn't count. So probably more like 5 months. So there's your kind of timeline that I'm kind of trying to find in consistency. But this is a pretty hefty amount of failed to delivers, which causes a pretty hefty spike, especially when regular people want to buy in and they want to go up with the movement, right? So not only are they covering their loaned shares that they're paying cost to borrow, right? Well, on the regular legal shares, they're paying cost to borrow. They're probably not actually paying anything for fail to deliver, which is also a very sketchy situation. Fail to deliver seems to be a whole space of just like, if you make a mistake, you can just throw it away and just ignore it for a long period of time. Like that's there's a meaning to fail to deliver, and it's normally associated with mistakes, you know, human error. Something gets written down on a piece of paper incorrectly. There's a share that's somewhere out there that we have no idea what's going on because somebody didn't document it. Therefore, that share goes to the fail to deliver. That's the real reason fail to deliver exists. But shorting is that case again, because you lent out 5 people 1 share. You can only give 1 person that share. The other 4, that's almost like an error, but it's almost like a very purposeful error, right? So the other 4 enter into the fail to deliver area until they can get a piece of that share from the market and then recover it. So that's the extreme problem here. These fail to delivers are meant to be good intentioned errors, but you can, lend out to multiple people without knowing it. Apparently that's okay. So that caused this, which makes me very happy when I look back, because now we're at a much higher base. 20, I call it 30, so around the 30 area. So we're at the 30 area, but over here before that explosion we were at the 120 area. So you can imagine being at the 30 area if we still have to like return all of these 6 months down the road. They're gonna pop up again. So this is not this isn't even a single stock play. A lot of AMC people are gonna be like, oh, I'm stuck in AMC, I'm gonna stay here, I'm gonna fortify the base. That's fine, dude. Fortify away. And much respect to you for fortifying the way and just constantly buying AMC. But if you can find a pattern to this, you can use each hop to continuously increase by at least 100%. Most of these hops for me have been about 200 to 300%, doubling, tripling the money I have, right? So if you keep finding these, now that it's much more clear, especially with how long they can take the pain of a high cost to borrow rate, right? You can kind of get an idea for a timeline. This one still has a little bit of cooking to go. I'd give this maybe a month or 2 before it goes, based on the CTB max. But because it's 100, and if it stays 100 for a long period of time, it could be a month or less, right? They can play with this 100%. They can free up some shares to be shorted, so they reduce the utilization so that the cost to borrow reduces, right? So you're kind of fighting with them, trying to keep them at a high utilization so that their rate increases faster. But again, you can't predict these things because you don't know the actions that these institutions are going to take. You don't know if they're going to free it up, if they have the capital anymore to free it up, because they've been doing this with AMC, they've been doing it with GME. The utilization on those companies is above 90, but it hovers so closely between 95 and 90. And at one point it was 98, but it went down to 89. So they're really trying to hold down the utilization on AMC, and that's money. That's money that you have to return shares. So you have to buy back shares, return them, and then they can be re-lent out, right? So they're losing money for every time they open up utilization so that they can actually short a stock. But again, because there's so many stocks right now all over the map popping up with all of these CTBs, especially lately, there's going to be a lot of stocks to go through this explosion. Support was one. Blink, I think, is going to be another one in a month. I'd give it a month. Canoe, that one went above 10. I'd give that 3-4 months. But I've prepared myself because, honestly, I remember the previous spike. I think I entered it. Yeah, I might have entered it a little too early. But it didn't cost too much to enter, so that's why I kind of put myself early. Catch that dip. And again, yeah, it did see a nice reversal in the actual technical, so we might be seeing a recovery with our what was I looking at? GeoEV Canoe. I don't understand the ticker. Yeah, so this positive pullback here at 5, which was a very strong support from previous consolidation. No? Am I high? Oh yeah, I guess over here somewhere. How did I miss that? They barely touched. Fine. I mean, yeah, it could drop more. Look at that jump though. But I think we're gonna work our way up because look where the max volume is. Most of the players are in this area, right? And that's why it's drifting so much faster up than it is down. In this case specifically, and most of the time you're going to see really fast ups and slower downs, But in this case here, in this case, a lot more green in a row for long periods of time. And here, even further down in volume, a huge fast push up. So I can see another volume base forming here based on that volume profile. We have this one that's going to support us when we go above. It's going to act as support again. It's going to be resistance for a little bit, but I think there's so much volume here that people are going to buy it up. So it's not going to be a hard resistance, but it'll be a strong support underneath us. So that's why I decided, I was like, hey, looks like it's a nice bounce up, a very good formation of strength, especially underneath the volume profile. So that's going to come back up. I got in probably around the 760 mark. I'm probably a little bit down right now. But I just prepared myself early case, and then I'm probably going to average in if I see some closer signs of big gains. But yeah, no, that's the concept there. Finding the cost to borrow. Now, this is an application. This is Ortex that gives you all the data in front of you. So that's actually nice. But you can still find this data also on fintech and individual brokers. One thing to know about Ortex is they actually get data from 85% of all brokers in the United States. So yeah, 15% miss, but we get a pretty decent majority data set. And that's why they can do some estimations. So estimated short interest of free float. So those are estimated values that they use all data from and try and predict where it's going to go. AI stuff. However, the most important part is this. When will it pop? If it hasn't popped in the diagram and it's starting to climb in percentage, you're going to see more people start buying in. When it gets above 100, you're going to see some flying high. 500, that's insane. Now, I don't know about support, if that's going to keep going. I hardly doubt it, at least not yet. Because you're looking at an already squeezed company. We for sure squeezed. We won't see the data resemble it yet. You know, it still says 63 million or percent, 6 million shares, right? And potentially increasing in some form, 6.9 million here. But this was a volume of 166 million. That's how many transactions happened in this giant red bar. So when I left at 50, I gave myself a good sort of buffer because I don't know how far it's going to go. But now that I think about it, in a typical volume bar, you have about 3 million shares or transactions. We had 6 million, double the free float. So if we have double the free float, we can increase about 300%. That's my speculation. So I am genuinely looking for these smaller pops. I mean, I would call this a small pop because we're only at 60, right? GME went 2 for 500. So the smaller short squeezes, I'd max that at about 300, 400% gains. I would safely exit at around 200, 250 piece by piece. Not all at once, but start breaking down the amount I have. And then if I get to 300, 350%, I start selling larger chunks, right? But I always keep a piece in just in case it keeps on going just a little bit longer, or even a hell of a lot longer, right? You would be very mad if it didn't go up, if it went up to 2, 3, 4,000% and you left it 200% gains. So always shave some off the edges as you're climbing. I start normally around the 150, 200% mark to just shave a few shares here and there, maybe cover my cost basis in the beginning. So that one's done. We have to see an update to see how much the percent free float on loan is still, and how many shares need to be covered, returned. So that's the problem here. We don't know that. It's a T+2 system. So you wait 2 days, 2 business days for the data to be refreshed in accuracy. For Ortex, you have exchange reported SI, short interest. That's the blue line. So this is the exchange's reporting the values every 2 weeks. And then you've got an estimated short interest, which is an automated algorithm that tries to follow based on the current activity in the market, right? If it sees shares being covered by other market makers, it's going to assume they covered here too. And if it makes a mistake, it'll correct itself on the next exchange rewarded document. But it's pretty accurate. It consistently stays around the marks and adjusts pretty well. But it says it's increasing. So we need the next line. The next line I predict has got to be down to, I don't know, I'd say 20%. I'd say maybe 500,000 left, because that's huge volume. And for only 6,000 shares to cover, plus possible, I mean, you've got million here. Let me see. The fail to delivers also have to get covered, mind you. That's another 6 million, 10 million. Okay, that's a good amount of millions. So if the fail to delivers are active still, which maybe they are, I'd say that I can see 6 million return go from $20 max to $60 max. That's visible to me, especially if the buy orders are like storming the sell orders. But I cannot see these, because these were like at least 40, 50, 60 million extra shares that are failed to deliver. So maybe some of them covered, but I don't think it's done yet. And of course, on the way down, they're going to keep shorting it, and they're going to reintroduce more loans because they want to profit on the way down. So this is just the strategy that just keeps them in a loop. I kind of refer to this as the snake, the viper. Is it the viper? The cobra? The cobra trying to strangle, right? To wrap around, and it's trying to strangle a porcupine. Okay, think about the concepts there. They're trying to constantly strangle these shorts. It costs them so much money to sell borrowed shares in order to push the price down, and then have to hope to buy it later at a lower cost, especially when there's so many eyes on these companies, right? So the porcupine barely has to do anything. We just buy and hold. That's it. That's it. You buy and hold. But this cobra needs to put a lot of effort to try and squeeze the porcupine, and in the end it's hurting itself. So this is exactly the situation happening here. Now as the price goes down, you're going to see a lot more shorts increase back in. Some of them are probably going to be failed to deliver because they're going to squeeze, they're going to push that price down as much as they can. At some point you're going to have to return the shares, which causes a huge upward movement, and more people start buying, and then there's another spike in 6 months, right? So the development phase is, I would say, about a 6-month period. That's why we see these constant pops here and there, and that's why for support the news said nothing about it. Of course they won't say anything about it. The news doesn't talk about interesting things ever, anything new. They talk about the things they want you to know. So don't expect any good information from the news. You're gonna have to do the research yourself, or depend on some random person on the internet like me to do the research for you. Just leave a like and subscribe. You know, if this makes you money, hey, give me some love. So, oh my god, yeah. So we're at a point where Blink is getting ready. Hood is basically feeling like it's gonna pop. Like, that's 350%. That's huge. Like, they can maybe cover for another week, if, right? That's gonna be up even further, and the utilization is still nearly 100%. I don't know what these companies are doing. These institutions are ridiculous, and I can't imagine someone legally being responsible enough to handle money, handling this situation right now that was created by them. Like, our society is ass backwards. Our society is ass backwards. How can we depend on responsible adults to not gamble on a market? You know, this is basically gambling. When you're doing this, at least you have data that you can look at so you can verify information. But when it comes to gambling, you know, you can count cards. But if you count cards and somebody knows you count cards, or they figure it out, what are they going to do? They're going to kick you out. No smart people in this gambling space, only dumb people that are willing to lose their money. See what I mean? Like, that's the problem here. This is the smart money that they call themselves, the self-proclaimed smart money, the big institutions, the ones that are having a shit show of a run right now because they got a bit overconfident with their abilities and underestimated the possible apes with new money. There's a lot of people with so much money right now, like just regular folk. The more money these apes get, the more you're gonna see exponential pops until the whole short industry collapses. Now, that's a good thing, but the problem with that is the short industry is our banks and our money lenders and all the internally connected responsible adults that have integrated themselves into the economy because they keep telling us, trust us, we know how to handle money. And then they do this bullshit. Oh, pattern day trading. To protect our customers, we don't allow buying and selling of the same security if you have under $25,000. I'm sorry, if I'm losing in something, shouldn't I have a safe feeling to exit without having to trigger a buy, sell, combo day trade? Like, if I buy something today and I'm like, oh crap, I just found another data point that's gonna mess things up. And if I sell, all of a sudden, just because I have less money, but I'm trying, like, I'm putting a lot of effort in, but because I have less money, you're gonna protect me? This is a rule. This is a rule from FINRA, or yeah, I think it was FINRA, that individuals with less than $25,000 cannot day trade more than 3 times a day. Otherwise, they stop you from buying stocks for 3 months. What the fuck, right? So, okay, you're protecting me because I have less money, but the bigger guys, they can do whatever the fuck they want because they have more money than me. Like, that's not even protection at that point. If somebody can exit a position without being penalized for it, if it's a same day trade, if somebody can be penalized for doing the same thing someone else is doing with more money that they're doing freely, but you have less money, so you're penalized for it, that's oppression. You want to call it protecting your customer? I call it oppression. I call that shit, you don't have enough money, so you're kind of stuck with shit rules until you can make enough money, right? I've been battling that 25,000 threshold, nearly there. 20,000 in one account, 15,000 in the other account, 2 accounts separated. Finally split them into somewhat even chunks because I don't trust Robinhood. And again, I'm trying to get the hell out of Robinhood and I'm using Webull. But that rule itself is a very big hint. And the way they're using it is that pompous, oh, we are the caretakers. Trust us. We know how to protect you from your own money. Go fuck yourself. Leave me with my money and I can do whatever. If I want to gamble that money, that should be a thing I can gamble. Right? Like, I mean, just the mere fact that gambling is illegal baffles my mind. If somebody wants to lose money, let them do it. It's their responsibility. Why is everyone penalized because one person doesn't know how to money manage? Like, yeah, I can go gambling too, but I'm not going to spend thousands of dollars. When I win, and I'm leaving and I'm taking whatever I got. I'm not going to keep going thinking I'm going to double down. I understand how luck works. Luck doesn't happen twice very often. But double down after that and then lose all your money? No, I know when to stop. That's the problem. People don't know when to stop. Anyway, welcome to the most regulated casino of your lifetime. And when I say regulated, I mean for people under $25,000 in liquidity. Anyway, I babbled enough. Let me see. One last thing I should do. Okay, so we went over all the details on how to find these special plays. I'm gonna keep looking. Oh yeah, if you're into crypto, shameless plug, I'm heavy into SafeMoon, and the concepts are pretty straightforward and very well designed as far as maintainability over a long period of time. Now, of course, SafeMoon, it's one of those meme stocks to the moon, rocket ships, diamond hands, etc. Right? Yeah, I guess that's kind of where the concept came from. You know, kind of take the main social trend and throw yourself in there. It's safe on the moon, right? Get your tendies on the moon. But they have interesting projects that I'm very much intrigued about. Safe Moon Digital Wallet, exchange that they want to centralize using Safe Moon as a swap. The one thing that is interesting about the exchange, at least written through their, I think, Twitter or something, that they're going to focus the traffic and volume in the African continent, where they could actually use this sort of currency centralization to stabilize everything, right? And introducing them into a global exchange will basically get people to buy in and gain money as the coin itself gains liquidity, right? On top of that, the coin burns, I think 10% of every purchase, 5% is burnt and 5% is put in a locked wallet. So where is the burners? So they had 1 gazillion or whatever the hell's after a trillion. So they already burned about 430 trillion supply. So it's a very promising long-term hold. Nothing that's gonna happen crazy in the next few. But I did join in really early and I didn't sell out. I'm holding it hard. I think I joined right down here at the 0, 0, 0, 6 zeros and a 6. I think that was here. So yeah, around here. So I joined here. We were getting close to the fall, but we got a nice bounce back, and that is a very strong bounce back. Not only for SafeMoon in a general sense, because a lot of volume is actually coming into SafeMoon again, but this is the moment that the market overall experienced a nice landing. So if you take a look at the total, I think it was the hourly. No, not the hourly. Daily? No. We fell on that nice volume support. Where is it? Okay, I'm just gonna go to the daily. So on the daily yesterday, we had a very strong, like this candle just makes my eyes turn into hearts. Do you know why? Well, let me tell you about 2017. Back in my day, when crypto was cheaper, like hella cheaper, we had this bump, right? This was where Bitcoin was about 20,000. Like it got to 21 maybe on the 5-minute charts, right? Averaged out, I think, 19. No, crypto, Bitcoin. So Bitcoin at this peak was about 20,000, call it even. And it went down. And I've been watching these two so much. These two patterns give me the creeps. And I have been so skeptical, right? So here's what I'm looking at here. We had a double top and the second bounce was a max. I can't say we had only a double top, but we had a similar peak. But we did have these other bounces, which was very nice. So that definitely helps me reconsider a lot. But regardless, this is a much bigger move than it was down here. So you're gonna have more detail in between that you wouldn't see on these charts. Because it was smaller gain, faster. Longer gains, higher. Are gonna have a bit more bumpy rides up. But that double peak made me slightly sus, whatever. And then I saw this. It's a squished version. And then I saw the drop and climb, So I've been just staring at these 2 points, because what happens next? Patterns in history tend to repeat themselves. Then we go back down to basically this level here, which means that if this is the same situation, we're probably gonna fall somewhere here, right? If I saw more red candles in this, because down here, if we take a look at it down here, you're going to see that it's basically in the Heikin-Ashi, it's a consistent flow of red. Even if I go regular candles, oh, where'd it go? Okay, it's still a consistent flow of red. Right? I like the Heikin-Ashi, it makes trends much more clear. But we had a consistent flow of red, and that's why I've been super sketched out lately here. But I think we just found a nice volume support, which I'm gonna actually mark. We landed very nicely above this trend here. Now I'm starting to get so many trend lines that I'm gonna start deleting old ones because they're transforming. So this one's a very strong trend line. I really don't need others. So this green line makes me happy. It's changing from historic patterns. And the reasoning could be simple. People are getting more comfortable with Bitcoin, with Ethereum. Robinhood, Webull, they're giving people options to go on their app, find Dogecoin, and buy Dogecoin, right? It's not technically owned by you. You can't technically use it at a store when it becomes legal tender on a general card basis. It's technically legal tender, obviously, but there's no connection to society unless you move it through a bank at the moment. So once you know you can use Dogecoin, if you buy it from Robinhood, you're not going to be able to use it because technically you're borrowing Dogecoin from Robinhood's wallet. So it's all just programming and algorithms that associate you with a specific coin. And when you sell it, it just removes your name from that coin. They still own the coin in their wallet. Somebody else buys it, they just put the name on that person. So it's not usable, but it is very handy for making money. And it does feed into the liquidity of the market. However, it doesn't help when I buy or sell from Robinhood, because again, I'm not actually buying from the global pool. I'm buying from Robinhood. They already bought all of the shares they need, right? They're just basically warehousing all the shares and moving them from username to username, whoever buys and sells. So the liquidity has already been added to Dogecoin, which does give it a very nice base, which might mean why we're basing here at the 27 cents. We might have like a 25-20 dip, but that was only if the market was looking shitty. Right now, the market's looking very nice in a recovery pattern. This is going to have a lot of effect in the future because I feel like this is just going to get people confident for another run because institutions want to get in on crypto. You've got green energy focusing within the crypto space. You've got people becoming comfortable and having the ability to enter crypto positions on a regular daily basis. So crypto, I feel, has so much usage that potentially this is just a reversion up. We're going to test our previous high total cap at 2.4 trillion. That's probably going to force Bitcoin to be about $50,000-$60,000 again. And this is a very good bottom. We're going to hover maybe here a couple of times. Probably going to go up, break it, or not break it on the first run, obviously. Go down, test this solid support, play around in between a little bit, reset RSI, and then finally try for another breakout. The third one's normally the key, especially for these tops. The third one can break the top. The fourth one also, but low chance there's going to be a fourth one. If there is, then high chance the fourth one is going to break it. But normally after the third test, you're going to see the first test, second test, third test, you're going to see that breakout. It's high probability. I can't say guaranteed, but high chances that on the third, fourth round, you're going to see a breakout. But the fourth round is very low because if the third one doesn't go through, people get less confident and then it starts selling down, possibly to a support under, playing around this for a bit because it's not sure, because it just got denied by this. You know, it's going to kind of play around this area if we get denied again. But if we do get through the third time, we're going through the third time. And that'll just continue the pattern. But then I can't match it to anything in history. So at that point, we're kind of, maybe we can match it here. Honestly, We could, because I'm only trying to figure out patterns based on what exists. So we could technically not even be looking at our highest point. This is just popping up to me. This is absolutely magnificent. This actually was not something I thought about before. And holy crap, if it's the case, and I think it might be. All right, what happened over here, right? We went up. We went up. We had a very nice run. I can actually see some breakouts, some red lines in between, so I'm a lot more confident in my assumptions. These little red breaks to reset the RSI and keep on going. But then we had this pretty decent drop. Like, it wasn't huge. I mean, I guess you can call it a decent drop down here. That's about a, what, high to low? Oh, come on. Oh my god. Why won't it pop up? Oh, now you, oh, okay. Wow, now you pop up. All right. That's about a 50% drop. I mean, it's pretty comparable. We had a 50% drop from this. But then what happened, right? Sure, it went down, but it recovered pretty quickly. It had a really nice recovery. It hovered down. The percentages won't always be accurate or resemble. But this goes up again. So 3 arrow, 1, 2, 3, A, B, C, right? So this might be a new situation where we're actually not even at the top yet. See those little breaks I saw earlier, the red breaks? Well, now they're bigger because now it's much more liquidity moving faster. But we did have a nice smooth run up, a drop down. That's 50%, and holy crap. And we're probably, maybe, going for that next rally. So we could literally be at that first rally ending before the drop and the reset, and then another rally. So we may not even be over here where I'm thinking, right? I'm only trying to find a pattern in the movement. I can't really look closely into the details because it's almost like a magnifying glass. If you're comparing a smaller detail to a bigger detail, you're gonna have some resemblances, but you don't have enough smaller detail to really compare nicely with the bigger, more detailed system. So you're trying to kind of match. This match then basically tells me we have a pretty decent chance. Let me see what the percentage change is here. That's about a 50% drop, for real. I mean, the other one was 47, this is 53, but that's not a big difference. So that actually, especially in a bigger volume space, that's not a big difference. And that's actually even more confidence for my, oh my god. We might actually have another rally. If we have a rally, what's the possibilities? All right, so from stability here, we went up 400%. Oh, check. Let's call it here, 500%. And then 700. So we have another 200% weighting, 20% between. That's about the same as the first peak. First peak was 600. I mean, it depends on what peak I pick, but yeah. Then I could pick lower too, because technically it started here. That's too much though. That's a good recovery spot. So here to here is about 600. So call it 600. So maybe what, 20% up more? 20-30%? Let's call it 30-40. Let's do 35%. So we could be seeing a very big peak at around 3.5 trillion. That would be insane. This is going to be a really big resistance though, because psychologically 3.5, that's a big psychological number. But even so, we will be extending pretty far off the previous peak. But following how much the growth was from the previous two, we should have about a gapping space. So if we do make another run, we should potentially be around these spaces here. Oh, when I select the tool, it fucks up. 24% to 35%. That sounds about right. So somewhere in here, it could be at the bottom, it could be at the top, but we might be approaching this. And based on that one little green candle, it's looking very nice. And it's creating a new volume support, because you can kind of see the shape of the volume. That just means that more and more people keep buying within that area, like with volume access. So there's strong volume down here, means that we can pass it pretty quickly. But in the way down, it does provide nice support because people are buying still within this area. There's a lot of volume. Here, we're developing another sort of pointy space, right? That's probably going to be the next volume of resistance or support in the future. That color, I'm going to say blue. That's fine. Blue is fine. But this green I don't need. Maybe I need. I'm just going to keep it green for the previous. Yeah, we might do some bouncing off green, back up. But I think we're pretty confidently approaching a possible another bull run here to the 3.5 trillions, which would be pretty insane. So that's the crypto market. And another thing I like to look for is the BTC shorting. So who is willing to short our Bitcoin? How many people are shorting Bitcoin? Where's all my... Oh, yeah, I'm supposed to go in crypto. We'll go look at utility in a second. There it is. BTC total, BTC USD. Yeah. So shorting, again, like we talked about before, is basically a strategy to make money when the stock goes down or crypto goes down. So people borrow shares at high levels of price and buy them back, sell them and then buy them back at a lower price so they can make the in-between. But shorts are very weak right now. Very weak. You can tell, for instance, here, look how the shorts increased here, and it did push it down pretty far, right? That pushed us down to a low. On the way up, though, not a lot of shorts existed, right? Here, the shorts came up, pushed us down pretty far. But on the way up, no shorts, meaning a bull run. So I like to look at the low levels and say, hey, if we're within these levels, so here to here, I wouldn't even say here to here, here to here. These low levels here are very healthy. And this is just me assuming it based on the trend, right? These are healthy levels of shorts. So they're going to always exist. The key is how much are they affecting the price? And we are safely in the middle. So we are actually setting up for a bull run based on confidence. Normally, if you short something, you think it's going to go down. So if you think it's going to go up, that's the opposite. That's confidence. So the confidence is high because the shorts are low. That green bar pops up like a angel, reverses our dreadful possible fall through of the blue resistance line, which is a very strong resistance line. We played around that blue line for a while. We didn't really stay up above it for very long, right? We went once, we went twice. This would be the third time we're entering and stabilizing on. Remember, the third time you break, right? And we're on top of it. So that's actually going to fortify this. So we went above, broke, but came back down. Went above, broke, bigger, but came back below. Here, we're stabilizing. We are putting our foot right on it. That green bar, just stepping right on top of it and saying, I don't give a F. That's it. No more playing around. I'm stepping on you. So that's huge. That one bar can tell you a whole story. Huge strength. Shorts, low. Total 2 is just basically total without the Bitcoin. Same thing. It's basically the same thing. What we just saw is basically the same as this, except this is everything except Bitcoin. So it's all this, I guess, other cryptos, because Bitcoin does take about $1 trillion of market cap, nearly. So it's also looking good, but there's nothing to analyze there because it's basically the same thing. Ethereum also stabilizing on a nice space. ADA. Oh, it's double touching on that bar. Triple touch, or maybe this one's gonna break it. Looks like it's already above and it's gonna stay up there. No, there's just such a bullish tendency right now. Right now is just super crypto bullish in my opinion. Everything is looking good. Not that they're all different. They're all basically crypto in some form, but they are looking healthy. They're showing green upwards. There's low shorts, high confidence in the market. I just recognize that we are in a different pattern than what I expected. We actually haven't even met the top of our total. This was just the first arm, and we might be approaching another bull run, and all the signs are there. So I'm very bull on crypto right now for the next, I would say, I mean, the end of the year, actually. End of the year is a pretty big bang, in my opinion. All right, so that's crypto. I talked about the meme stocks, or the short squeeze stocks. Now it's going to do a little market stuff. I like to daily go in and take a look at my typical rounds to analyze all the aspects of the financial system. So crypto, there's not a lot to look at. We basically looked at one graph. That was the total, right? The total is basically all crypto liquidity, all the money in crypto into one stock. So it's not that crazy hard to take a look at the patterns there and figure out if you're in the bullish or bearish territory. Here, however, in the stock market, you are entering a very complicated pipeline of sewage for shit. Like, it's almost no reason that it's this complicated. There's like no reason that it should be this complicated, but they do it because if it's too easy, anyone can do it, right? So you have to have professionals that'll get a bachelor's degree and a bullshit business diploma so they can tell you how stuff works, because they're the ones that made it fucking complicated in the first place. It's like going to a car mechanic, getting one thing's fixed, and they're just snipping a wire on the side there, waiting for that thing to break so they can come back and they can get more money off of you. It's bullshit. But regardless, it is our system. So it is a complicated mess. SPY, I'm just gonna go from, this is the first video I'm actually going to be doing full out analysis, so I'm going to explain just about everything when I'm doing these rounds. In the future, I probably won't be explaining it, just calling out the details, right? But for this round, I'm going to do a pretty decent explanation on how I use these particular guides. So SPY. SPY is actually SPX. SPX is the S&P 500. But SPY is a smaller ETF. We'll talk about ETFs in a bit. But SPX is basically the top 500 companies in the United States and how good are they doing? And they're doing absolutely fantastic. And they always are, because every fucking day it goes up. Unless you have COVID, you know, it goes down. And then it comes back up though. So like, good dip buy. But I mean, it's ridiculous. I don't understand the concept. I see a pattern. I see a nice. If we had a healthy system, honestly, we would be following this curve down here. Goes up, relaxes, comes up, relaxes, and maybe does that continuously, and then it just stretches up and just stretches up and just stretches up, right? But it always has to have a dip. You can't always go up. That's the point. You know, you're thinking of sine waves, you're thinking of physics, you're thinking of trigonometry. I don't know what classes you've taken, but you know, an up has a down. Yeah, that's kind of the end result there. Gravity is going to bring you back to reality, no matter how high you're going. So I'm very, very scared at what I'm drawing in red versus what I'm seeing in the actual S&P, right? Now, I'm drawing an estimation. I could be completely off. It could be way lower, or it could be this high, or even higher, sloped to match. But this was in a situation where we didn't have crazy freaking worldwide issues. This isn't a perfect world we're talking about, right? And no matter how much we want to think American dream perfect world exists, right now we're going through inflation. Not a lot of the world yet. I'm feeling it a little bit. but in the United States, it's getting inflated. Food is going to cost more. Daily necessities are going to start costing more. Yeah, this is not a stable society right now. On top of that, we just discussed AMC, GME, and all the short squeezes. The responsible adults that have been left responsible with our money, because we pay them to do the responsible thing, have obviously stretched their hand or whole arm into the cookie jar. Like, they are not even, they are a cookie jar. They have taken so many cookies from the fucking cookie jar. They are the jar. And once they break, because they have to return all the cookies they've been borrowing at once, and the price goes up as they're borrowing, and then they're gonna have to be paying so much money for one share. Until that moment, we're just seeing ups. But because the system's so flawed, it's almost like, I don't know, it just feels like fabrication, Wizard of Oz bullshit, right? But case in point aside, while the pattern should be a little bit calmer, it hasn't really shown this. In fact, in the last couple of worst years of our lives, COVID, guys, how the fuck have we climbed? You can't tell me the market's perfect right now. How do we climb 100% after a pandemic? Everything was closed. Where did this money, this growth and ability in a stunned and crippled society, because we can't leave the fucking house, because if we leave we're gonna get sick, and then get our close ones sick, and then depending on age and biological stability, like, people can die, right? So we're stuck in this situation, but we still growing 100%. This is bullshit to me. This is fabrication. I don't trust it one bit, and I feel like it's leaving so far up. Like, in reality, if I really take a look at it, I would accept it. I would accept it had we actually moved a little bit like this. So you see it's going here, right? If it dropped down a good amount and then maybe went back up like this, I would have accepted that. I would have accepted that. But look, like at this moment in time, when it was red, it was forced up quickly, and then it continued. Whatever happened within this brace here, or these few candles here, that led on a huge bull run. Not big candles if I really take a look at those candles, but still candles of a bull run nonetheless. But as we get upper, that slope keeps going down, right? Going here, going here, going here. So slowly but surely it's going to arc around, or if it stops growing, maybe that's when people are going to start selling, right? So maybe that's why it's growing. It's like that guy that, I don't know, has a bomb in his heart or something, and if he doesn't have adrenaline, it's going to explode. So we're looking at the market. If you don't go up, buddy, you're about to fucking fall. And the market's like, oh shit, everyone's buying it up. But I don't know. This is going to be I'm still watching this. I'm very suspicious. If I'm not going for a squeeze play, I am not holding any stock right now. And I'm only doing temporary ins and outs. Make money and leave. Any moment now, I can see some crazy shit start to happen with the market. Especially with the next few signs I'm going to show you. So, the put-call ratio is very similar to the BTC shorts. Okay. In BTC shorts, the higher the number, the more shorts exist. And shorts want things to go down. So if more shorts exist, their confidence is low that it's going to go up, so they're going to profit on the way down. Same thing here, except you're looking at a put and a call option. This is a management system meant to track the actual derivatives of stocks. You're thinking long calls, shorts. Well, if you buy it, you buy it. If you sell it, you sell it. But option wise, like if you're buying contracts, that's really the key. These are the contracts on, and this is stock market specific. It's almost like a short. So these derivatives basically state, hey, if you think the market's going to go up, you're going to have a put, and your put number is going to be large. And since it's a put divided by call ratio, it's always this ratio, The number for the puts goes on top, the number for the calls goes in the bottom. And it keeps track of the puts and the calls divided by each other. The higher the number, the more puts. Above 1 is actually puts win. Below 1 is calls win, at least ever so slightly. And calls are opposite. Wait, hold on. Puts are actually selling. I don't know what I was thinking there. So puts are the selling aspect, bears, right? They're thinking the market's going to go down. So the higher the number, the higher the puts. The higher the amount of people think that the market's going to go down. So right now we are hovering at 0.8. We have touched 1 multiple times. We're playing on the 1 heavily. Here a couple of times, here a bunch of times, here a few times, here, here, and here, right? So we're playing around that 1, but we're not dedicated enough. And I think this is just the government speaking and talking and, oh, everything's fine, guys. And the media is giving everyone news about things that are pointless because the reality of the situation is that we're all fucked. Those kind of things, right? People are not aware of the possibilities of a market crash just yet. But as soon as it becomes apparent, I predict we're going to see a put volume increase hard. How hard? Let's go back to 2019. So here's our breakdown. See, as soon as we settle over the 1 and we close above the 1, it gets worse, right? Now this is the weekly, so you're looking at the weeks here. But in the case scenario is you're settling in the week. When you settle in the week above 1, maybe even in the daily, to be honest, you're going to expect high puts, meaning people thinking that the market's going to go down. 1.5 seems to be a pretty shitty place to be. 1.5 was the very last put down here, and then they benefited and made money from the downward movement. Actually, I'll put another little guideline here. That's a red one because that's not what we want. So if we get near that, we're going to experience another sort of crashy problem there. But right now we're at a decent stable space. We're below 1. We are playing with 1 a lot, but that just, you know, over the long the existence of this indicator, we've been playing around the 1. So I can assume that this playing around the 1 is actually fine, normal. But if we settle above that 1, then we're going to start to have to question what's going to happen in the next week, right? Because at that point, I'm watching this area. If we settle anywhere in here in one of these situations, I'm calling bear market. Volatility is directly related to the S&P. Basically goes up and down as the volatility goes up and down. When it's green, it means that it's going down. So here, same idea, right? The market crashes here to here, volatility here to here, right? You have spikes in volatility in very different places. Oh wait, hold on, that's the weekly. Oh, there it is. Yep, that's the one I'm looking for. So there again, you have a crash here, and look at that volatility of the VIX. So this is still a signal. It's live. I can't say it's a predictor because we can find a pattern in it, but how do you predict when we explode, right? So it's a good on moment indicator. So if I see some craziness happening, like if we settle over 20, I'm probably selling stocks, at least portions, not all. That's another. Then we have actual federal stuff. The US 1-year bond, that's going down to shit, which means interest in the world is high or getting higher. But in the last, we want to look at the last few days really, because we're looking at current events. We have a considerable settling down here. 7% is not bad for an interest for bonds. So no, technically that's pretty high. That just means the interest is still low. I think interest is around 0.5. So 7% in bonds means we have a low interest rate in society. But as soon as that interest rate increases in society, bonds are going to leave, going into more profitable locations, and this is going to go down. So if we have any issues with inflation, which I haven't read this whole chart, I don't understand why we had such a fucking bull run up to 2.6% interest. Is that the CTB? The cost to borrow max? Jesus. Yeah, so it's pretty consistent, but I'm also watching this to drop to see how the overall market is doing. If we're gonna have tapering, we're gonna have a lot of market corrections. So as soon as tapering happens, you're going to see interest increase. You're going to see this drop drastically, probably down to the 1%. I can't say we've ever been in the negatives, but that I guess means giving money to people for borrowing money. I don't know. Regardless, market looks sketch. I'm not very heavily long-term invested in the market as of now. Neither am I in crypto, technically. I still have some pretty long positions in crypto that I keep dear to me. But I'm not really, haven't been until today, been playing with crypto the last few weeks because it's been looking a little bit weak in my opinion. But now with this new green bar we just discovered, I think I'm going to be playing more crypto. In fact, I should have been playing crypto right now, but I didn't leave myself money from the stock market. It has all my 35,000. So I can't take my money out on the weekends. So I guess I'm gonna have to wait. That's it. That's the updates I'm getting for today, weekend, and tomorrow, and really gonna be for Monday. No, there's nothing else to say. Just be very, very aware of Blink, BLNK. Support's done. I wouldn't recommend going in there. GOEV, that's another good one. Hood, if you want to play that small spike, yeah, but I probably wouldn't play it. I hate Hood, so I'm not even gonna benefit any money from it. I just feel dirty because Hood is a fucking Hood is Robin. And I think there were others, but they were pretty low, so I'm gonna have to keep looking at them. Other things I'm looking at are actually current focus. My current focus is this. Overstock actually is pretty interesting. It had the same short squeeze scenario way back in 2018. You thought this was something new, huh? So they had a short squeeze here, but the short squeeze was not because the regular people held the stock, but because the CEO bought up all the stock. One person with a lot of money can also cause a squeeze, folks. So that happened. Not enough float. People had to return. Went up. Went hella down after. But I guess they just kept on shorting it on the way down. And I keep telling you, these people will not fucking learn. If it's going down, just stop shorting. If you're a hedge fund and you're listening to me, however, on whatever channel or medium that you found me on, I'm one, very honored to talk to you because obviously somebody's listening. But two, stop shorting. Look how the tables churn so quickly. Like, we're gonna have this, if we don't stop shorting, we're gonna be having this on a multi-yearly basis. Not only that, it's already looking strong. It's coming up from a bull, creating a bull pennant, and we're looking pretty strong. Like, it's kind of hovering too much on the bottom side for my taste, but it is being supported there, right? So if we can get a last couple of upper tests, I'd be very impressed with Overwatch, Overstock, and I'd probably enter it. I'm not entering it because it's already been squeezed. The interest isn't much, but I like watching it because it gives me more data for what a squeeze looks like, especially after a long period of time when they're still shorting it. When it goes down, let it go down. Stop shorting it because you're just gonna make it go this again. You're gonna get fucked again, and then the slope gets not as steep, flatter, and eventually you end up with a slope so damn flat that everyone's like, fuck it, let's all buy in, and then you freaking go higher. Whatever, you know, that's what I'm saying. The more you short something, the more you feed the actual concept that you're basically going to lose money later. Overstock is nice. Body, I hear a lot about this. I'm not impressed, so I really shouldn't be a focus, to be honest. Yeah. Plug Power, that is another one with a very nice interest. What it was that? Let's see. I think I came into it too early though. I think that's after the whole marijuana squeeze. So they've had their short covered. They have failed to deliver a decent amount, but not too crazy. The short's okay, percentage free float. They have a good amount on loan, but their utilization is super low. Their CBT max is pretty high, but their utilization is only 20%. There's still 80% of plug available to be shorted. So if they wanted to short it, they can short it hard. But again, if people are persistent, they can short it as much as they want. If people buy it, well, you're about to experience another short squeeze. So I can't speak for plug. I came in too early. I don't know why I even went in it, but I went in and out. Bought some calls just in case it decides to explode. Looking at total constantly, keeping track of what's happening there. Tesla, I like. I mean, I benefited a lot from it. I think I bought at 200 and I sold at 900. One of the tops here. I made a good startup set of cash with Tesla. It's one of my old school babies, and honestly, it kind of experienced the squeeze also. This was one of the original squeezes because Tesla was a highly shorted company for a long period of time. So they were constantly shorting it. But eventually, Tesla, Elon, got so socially popular and, well, investing became so easy. You download an app and buy a stock that so many people started to fly into Tesla. And honestly, he's got a good company, so why not? And when those shorts try to short it, they did short it a bit, but they had to buy it back, and everyone else was buying with them, and everyone else was buying. So this is a level of shorting that has happened, but mostly buying, actual long-term buying. So people are like, oh, Tesla's not worth what it is, but they're like, oh yeah, but it's going to be worth this in about 5 years. Fundamental play, sure, I can understand that. But if it's going to be 5 years from now, you know, this still has a chance to fall back down somewhere during a shitty market situation before the 5-year price catches back up. So I'm still considering, one, it's showing a weak flag, lower highs, barely lower lows, right? So lower highs are not good. High, lower high, lower high. As it goes lower and lower, the buyers are getting less confident. And as the selling doesn't change, it just shows the sellers are basically pretty confident in this bar, and it's gonna drop underneath with some mega selling. I mean, I could be completely wrong and we could have an amazing market, but if the market crashes, this thing's going down, just saying. And I can see the resistance be about the 400 mark, maybe lower, maybe playing around the 300 and then recovering to the 400. So I can see this, and for sure this is a very strong 200, but I cannot see us going to 200, not unless, like, worst case market situation. So I would say a good conservative value is 300, 400 range, right? So I'm not in Tesla. I'm gonna be waiting for that. If I miss it, then fine. I've been making money in different cases, but if I don't miss it, I'm long in. So long. I'm gonna buy by that time, the whole squeeze situation should be making me some pretty cash. So I'm gonna buy a crap load of Teslas and just hold on to them for dear life. Sol USD has been doing fucking amazing. Can I tell you how happy I am I'm in this play? I came in at like in the 70s. Once I saw that it broke out of the 50s again, maybe 60s. I came in at the 60s. I don't have a lot. I mean, for the majority of my cash, I don't have access to Sol, but on the side, I do have Binance and a wallet. So I am definitely in this, and I'm loving the way this is moving. But this could be a high test. The OBV is not showing strength. This lower hill here, this lower high has a pretty high volume, and this is way above that high, and the volume's still catching up. So maybe if we can make a stable volume here, if people flood it in and break this volume, break it above 2 billion, we're at 1.77 billion now, so just nice 2 billion, and then maybe above a little bit, that would signify a very good close and a very strong bull run. But if we close around there, that's going to be a divergence. The volume's not matching the price movement, so then we might have a small backward downward movement, kind of like this one. Nothing crazy, right? But no, yeah, this I should have bought more, to be honest. My only regret with these plays is that I don't buy enough. I have to split them around in all different places and just freaking. But good news on Sol. Definitely keep an eye on this. This is a deregulated system that's supposed to be more DeFi than Bitcoin. I cannot go through the technicals, so think of it as like a more discreet Bitcoin. They're trying to play that game, at least. They're trying to consider themselves a very safe and private investment, or money handling crypto. And it's in the DeFi, so we'll see. We'll see how that plays out. But so far it's playing out absolutely fantastic. Even after that huge run earlier, whoever got into this early is a freaking beast. Imagine going in at freaking 4, man. That's insane, that run. Regardless, can't catch them all. Looking strong. I mean, in the in the weekly, it looks nice. The volume looks nice. What was I looking at? Wait, what was I looking at that it didn't match? Was I looking at something incorrectly? No, this time the hill here is good. Look, no, that's a bull run. What the fuck was I looking at before? Unless it just developed even further and just really picked up on the speed. Yeah, so the volume's definitely picking up. If you're gonna be buying anything, it's time right now to get in on Sol. Once it breaks 100, it's going further. Yeah, I'm gonna stop here. It's a long ass video. You're probably tired of me talking. I can basically talk about stocks all day, so I figure I'm gonna do some of these sessions where I just go through the market, get my analysis going, speak my words into the air, because honestly that helps me think, and I just talk to myself, and at least not somebody out there can listen to me ramble. Maybe you're entertained or educated, or maybe I'm in no benefit to it all, so I'm sorry that I wasted your time. Otherwise, make that money. I'll be back in the next video. I'll keep you informed with what I find, and don't miss out on the short squeezes, for real. Like, if you want to start small and move your way up, get as much money you're willing to lose. $100, $500, what? Throw it in one of these at the right time. I'll try and make sure I keep everyone updated. And you could be doubling, tripling your money with each play. And there's going to be a couple of plays. There's going to be a good amount of plays. I may not be able to catch all of them, but I'm going to try and get as many plays as I can in these doubles. So, toodles. Peace out, gangsters, homies, ladies, gents. I will be back in the future.